a question and answer session. So the way we normally do it is to take questions from participants, people who have joined live. So if you have questions around taxation, questions around the Nigerian tax reforms, right? We are going to take those questions and then we are going to discuss them and dissect them. So we answer the questions, give you practical solutions, provide you practical comments, and also let you know what is applicable in practice, what the implication will be for you, for your business, and for your investment. So if you are in already, like the session, and we are going to start at the dot on 7:04 p.m. We are going to start immediately. We are not going to wait. So what I would do is I've gotten some questions during the week from my followers and from a session that I also facilitated yesterday. So I'll be sharing those questions with us, and then I will discuss those questions and answers with us. Right. So, but as we go in the session, when you drop your own questions as well, I would also respond to your questions immediately, and then so that it can be an interactive session for every one of us. So at any point in time that you have any question, feel free to stop me or drop your question, your comments, and I will look at it and respond to it immediately. All right. So I think we can start now. It's already 7:03. Okay, 7:04, 7:04, 7:04 already. Yeah. So we can start now. Other people will join us as we progress in the session. All right. So now to the first question that I have with me. All right. So somebody asked me this question during a session that I facilitated yesterday. So it's actually a session with real estate agents. I had real estate agents, I had realtors, I had developers as the property developers. I have people who are into construction services, right? So they help people construct and deliver housing projects. So one of the questions they ask is somebody asked this question that I think this person is a small company, right? Is incorporated as a limited liability company, and then currently his turnover is below 50 million naira, right? So his question was, as a small company with turnover below 50 million naira, how will I claim input VAT, considering that I will be exempted from VAT and I will not charge VAT to my customers, right? So what he's saying here is that it's a small company, his turnover is below 50 million, he's not going to charge VAT, he's not going to charge output VAT. So how then will he claim input VAT? So I'm going to respond to that. So I'm going to take it in two ways, right? So this question actually has two important elements in it that needs to be considered. So the first is to actually define what a small company is, right? For the purpose of the Nigerian Tax Act, a small company is actually a company with turnover less than 100 million naira, right? Not 50 million naira. So I know this confusion is coming from the Gazette copy of the Nigerian Tax Act, right, which states that small companies, which states the threshold as 50 million. So, but the the chairman of the Presidential Committee on Tax Reforms, has repeatedly clarified that the threshold is supposed to be 100 million naira and not 50 million naira. And of course, this will be corrected in another legislation or government gazette that will be issued very soon, right? So the correct threshold is actually 100 million naira for small companies. Okay, so now going to the main question of claim of input VAT. We all understand, okay, sorry, not everyone actually. So typically to claim input VAT, right, as a company, you need to have actually incurred out, you need to claim input VAT, you need to have actually collected output VAT. You need to have charged output VAT and collect output VAT from your customers to be able to claim input VAT. Okay, so what does this mean? Output VAT is the VAT that you charge on your own sales to customers, right? Right, and the input VAT is the VAT that you paid, right, to your own to people that you bought stocks from. So, for instance, in this instance, a developer, for instance, during the process of construction is going to pay for building materials, right? Some of them that you would have paid VAT on those building materials when he was purchasing them. Some of these building materials is what he has used to deliver his output, which is the housing project that he's delivering to the customer, right? So Of course, you know that houses, land and buildings are exempt from VAT, right? Land and building is exempt from VAT. So what this means is that he cannot charge VAT when he's delivering on his invoice to his customer who is building for. So clearly, there's no way to recover the input VAT he has incurred. So the question now is, if my turnover is not up to 50 million, right? How do I then claim my input VAT? So of course, sorry, if my turnover is a small company, of course, so it cannot claim input VAT, right? Because it's not charging any output VAT. So, but what the law allows him to do is to actually file for a refund of that VAT that he has paid to his customer to the people he purchased from, right? But of course, we know how rigorous this process is, right? Claiming getting a refund from the tax authorities, even though we've been promised that it's going to be seamless, right, with the new tax act. So, but again, there's a leeway. There's a window. There's a way to manage this so that you don't necessarily need to have to wait for refund. So if you look at the Nigerian Tax Act clearly and you read it and interpret it properly, you would see that for VAT registration there is no threshold anymore. So anybody can actually register for VAT. All right, Buchi. Yeah, thank you. You have a question, so please drop your question in the comments and I would respond to it. Please drop your question in the comments and I will respond to it. Yeah, please drop your question here and I will respond to it as we progress. All right, so clearly he cannot claim it if he has to file for a refund of that VAT that he has paid, right? So, but the act does not specify any threshold for registration, right? So meaning that all businesses are supposed to register for VAT, whether or not you are small or big, right? So if you already registered for VAT, in my own, I would advise my clients who falls into this bracket to actually go ahead to issue VAT invoice because nothing stops you from issuing VAT invoice, even if you're a small company. So the law does not say you cannot issue VAT invoice, it only exempts you, right? And you can actually exercise that right to go ahead to issue VAT invoice. And that what that does is that you are able to offset your output VAT with your input VAT, and you don't need to wait for to need to wait or to apply for a refund of the input VAT. Okay, please drop your questions. Please drop your questions in the comments, and I would pick them up and answer them. Please drop your question. Please drop your question in the comments. Please drop your question in the comments, and I would respond to them. All right. Okay. So yeah. So you don't have to wait till you actually um, apply for a refund. You can actually go ahead to issue a VAT invoice because you're already registered anyways, right? So go ahead, issue a VAT invoice, and then you'll be able to offset your output VAT against your input VAT. Note that now you can no longer expense input VAT, right? With the new tax act, you can no longer expense input VAT. So guys, please like this session so that it can go out and then we can have a lot more people join the session. So please like. I can't see you liking the section. Please like the session so it can go out to a lot more people and we can have more people join us in the session today. All right. So back to our discussion. So it's best actually to actually charge charge VAT, issue a VAT invoice so that you can recover and recoup your output VAT. That is my advice to. So that was my advice to the developer who threw that question to me in the house. Okay, so somebody is asking if you have a brother that does buying and selling in Alaba and his banker told him that they will be taxing him at 30% from January. What will you tell him? Okay, all right. So that's an interesting question, and it's quite loaded. Okay, yeah. So first things first. I need to know. I need to first advise my brother, right? I'll call him and sit him down first. I'll first try to understand his turnover, right? Try to understand his transaction volume and try to understand what his income would be at the end of the day. So, but I want to believe for somebody who's trading a Alaba, is going to be actually be a mega dealer, somebody that sells and makes a lot of money and makes a lot of profit. So for people who earn above above the minimum wage, right? And they are the best thing for them is actually set up a limited liability company. So that's where I will take it from first. So once you are earning above the minimum wage, so I say 1.2 million naira gross income per annum, clearly a dealer in Alaba would earn above that. So it first things first, set up a limited liability company. So we start from there. The next thing is to ask him for to prepare proper accounting records for his business, right? So he's going to prepare proper accounting records for his business. I will ensure he appoints an auditor, who's first appoint an accountant, somebody that can help him prepare his accounts, maintain his records, and then get an auditor to audit and prepare proper financial statements. So this helps him to know exactly what his net profit is from the business, right? And in all of that, he's also able to structure a way to compensate himself so that he's not dipping hands into the company's funds. So he's not going to be taking money from the company's funds. The company is going to have a separate account. He's going to have his own personal account separate from the business account. And of course, banker told him they will tax him at 30%. That is not exactly correct because the bank cannot tax him at 30%, right? The bank doesn't have that jurisdiction or that power to actually subject him to tax. So it is ultimately his responsibility to self assess himself for tax, right? So for the company already set up, that has an account already prepared, the financial statement is the basis for preparation of his tax returns, his tax completion and tax returns, not his bank account, right? So I'll first educate him on that. So his account, which shows his profits from that business, is the basis actually to determine his income tax and not his bank account. So this also clears the fallacies flying around that banks actually subject your accounts to tax, your bank account to tax. That's not true. So your account will not be subject to tax. So your financial statement, which shows your profit, is what will be the basis for determining my brother's company's income tax in this instance. All right. So of course, so what then is to do? The banker has told him this, or then he needs to prepare proper records. And what would happen is that at the end of the year, right, he files his account, his financial statement to the tax authorities, pays pays any tax that is applicable on it. That if no longer a small business and his turnover is now over 100 million. Then he pays the taxes that needs to pay that is due to the government. And if he's lucky enough, if it's a bad year and business is not too good, he may not have any tax to pay, actually, right? So, and then submit that tax returns to the tax authority. So that settles his issue with the bank. So what he does, all he needs to do is to tell the bank, show the bank his evidence of tax returns that he has registered for tax and he has filed his tax returns, and the banks would not have any issues with him anymore, and he would also not have any issues with the with the tax authorities. All right. So Buchi is also asking, what is the impact of the NTA on? Okay, so for those that don't know, NTA is the Nigerian Tax Act on those in the informal sector, given that their income cannot be well determined. They don't have proper bookkeeping. Okay, so for those in the informal sector, right? So clearly, the first guy in Alaba is in the informal sector. So, but because he has formalized his own business arrangement by preparing financial statements, doing a self-declaration, then he is now properly formalized and known by government, right? So, but for those who have not done any proper self-declaration and they're in the informal sector, and the tax authorities cannot actually reliably estimate what their tax liability would be. The the Nigerian tax actually makes provisions um, for what we call the presumptive tax regime, right? So it's a presumptive tax regime because it allows tax authorities to then use intelligence to determine what your tax liability should be. So this happens in the case where the the FIRS or the State Tax and Revenue Service has seen records of your bank transactions. They've seen that this person is actually making sales, right? But from that record, they cannot establish what your income is because, of course, your bank account only just shows inflows and outflows. It doesn't show what your income is. So, and because it's difficult to establish what the person's income is, then the tax authority will be left with adopting the presumptive tax regime. And what that does is that it allows tax authority to determine or to assume an income level for the such person that's failed to do a self declaration and then subject the person to tax on that basis. So it's of course it's then left to you to come forward to defend yourself and explain why what your actual income tax should be. And if you don't do, then the whatever has been raised by the tax authority becomes final and conclusive. So so that is what happens when you don't keep proper records. You have not done proper self declaration of your income to the tax authorities. You are then left to suffer or pay tax based on the presumptive tax basis. All right. So I have another question here. For rent paid from June 2024 to May 2025. Okay, for a rent paid June 2024 to May 2025, 100,000. Then June 2025 to May 2026, rent increased to 200. Now we have two different amounts lapsing into a year. How do we apply the relief? Oh, okay, wow. Okay, so this is some of the practical challenges that we would have when we start to do the implementation proper. All right, so yes, so of course, typically, not everybody have rents running from January to December. That's the truth. And we know that the government fiscal year for tax returns is January to December, right? So if everybody if so it means we have different people having rents running across different months, so it's going to be a lot of work. And you can actually have rents increase, you have rent increase during those periods. So what you would typically do is to prorate, right? So for instance, you have a June to May of 100, and you have a June 2024, 2025 of 100, and another one of 200. So what you would typically do is to pick the rent from prorate the rent for 2025 to 2025, prorate it by 5 months because you have January to May in 2025, right? Covered. So you prorate 5 months from 100,000, and then you prorate for 7 months from 200,000. So that will be the actual rent for January to December 2025 for this type of employee. So that is what you will use to determine the rent relief for the staff, and not either of the amounts. So you have to prorate to get the amount that you will use to determine the rent relief for that staff. Okay, so I have another question. Thank you. I like the way these questions are coming in. All right, so that's a good one. Okay, so another question here: how will business names, which has its separate corporate bank accounts, pay tax? Do they pay CIT or PIT, even if the business name generates up to 250 million naira? Okay, so I think okay, I think we might be mixing something up here, right? So business names as separate corporate accounts. Will they pay CIT or okay? You're asking they pay CIT or PIT. Okay. All right. So for business name, that is a business set up as a business name, incorporated as business name, they do not pay CIT, they pay PIT. So because the business name is not seen as a separate legal entity, it's not seen as a corporate entity, so it does not pay companies income tax, it pays personal income tax. The business name is seen as an individual, it's seen as the individual running the business or individual, the principal proprietor of the business. The sole proprietor is seen as the sole person for the business. So it's not different from the business. That's the summary. So at the end of the day, whatever business profit is going to be taxed will be paid by that individual, right? So the taxation for business names is PIT. So even if the business generates up to 50 million naira per year, it is still going to pay personal income tax, right? So that's the truth. So but with the new regime, the new Nigerian Tax Act, I don't think anybody running a business name and making 250 million naira in profit per annum should actually continue to operate as a business name. It is not tax efficient, right? So the only people that you find doing this are people in professional service space because the act exempts them from the small business um, exemption, right, and mandates that they continue to run as business name. So it is not tax efficient for any business name making these amounts of profit to continue to run as a business name, because personal income tax, it is personal income tax at 25% for all the incomes above 50 million. So, but if he's already doing 250 million naira profit, then you should just set up um, as a limited liability company, and then you'll be able to take advantage of um, many other deductions that's available for companies, right? So when you have a proper company set up, you can actually make a whole lot of deductions, right? So um, you can take advantage um, of other exemptions available in the Nigerian Tax Act. So the exemptions for assets when you set up the company, right? The exemptions that are available to you as a company, right? So it's actually better to set up as a company. All right. So Kafayat, I hope that answers your question. So if you still have any other question, you can let me know. Let me know if it answers your question. Okay. Adegunle says, is it still okay to calculate PAYE without the relief if the employee is not paying rent? Yes. So if the employee is not paying rent, you based on the extra provisions of the law, such employee cannot get the rent relief because the requirement to claim rent relief is actually the actual rent paid, right? And you need to provide documentation to support that claim, right? So you need to provide documentation to support that, yes, you actually paid rent to your landlord. So for employees that has not paid rent, maybe they are staying with their parents, squatting with a friend, or maybe the other spouse or the partner has paid the rent and the person did not pay, such employees cannot get rent relief allowance because even if they do it and they claim it during audits, the tax authorities can actually adjust for it and disallow and take it back. And then the company will then be left to pay the PAYE plus penalty and interest to the tax authorities. So as a rule of thumb, for all employees that want to claim this relief, they must actually provide evidence of rent paid, right? And they must substantiate and show you that they actually incurred that cost for them to benefit from the rent relief. All right, so thank you everyone. Thank you so far for the questions that have come in. These are very good questions. Yeah, they're very good questions. So while we expect more questions from you or reactions to the responses that have been provided, I would go ahead to take questions from questions that I got during my other session yesterday. All right. So somebody asked yesterday that will the tax authority tax all the inflows into my bank account? Am I supposed to obtain a TIN to continue to run my bank account? Because I've heard that accounts that do not have TIN will be closed from next year. Okay. Yeah. So I think I've mentioned this in this conversation today, yeah, that the tax authorities is not going to tax all the inflow into your account. It's not going to happen. So the worst that can happen is that they can subject anybody to tax based on the presumptive tax regime, right? So, but that is in rare situation where you have not shown any evidence of tax compliance, you have not filed any tax returns, and when they called for you to show up or to show evidence, you did not respond. So these are the only times that they can actually um, go the presumptive tax regime route. So, but ordinarily, the tax authorities will not tax inflows into anybody's bank account. And of course, everybody's supposed to obtain a TIN. Once you run a business and you have a business account, be it a business name or a limited liability company or NGO, whatever it is, once it's not a private account, you are required to obtain a TIN. So that is the requirement of the law. You are required to obtain a TIN, and the TIN will be linked to your bank records. It will be linked to your bank records. So it will be tied to your name, it will be tied to your BVN. And what this does is that it doesn't just stop with synchronizing with your bank records. It's also synchronized with your, for instance, your investment apps. So, or investment accounts. So if you have investments with any mutual fund administrator, any stockbroking firm, or any investment firm, your name or BVN, which you are going to provide to those people, is also linked to your TIN. So it means that and those people are also required to submit quarterly returns to the tax authority. So the bank is submitting quarterly returns, stockbroking firms are submitting, insurance companies are submitting. So all of the incomes we made across board from all sources is actually going to be visible to the tax authorities because they are linking your TIN to your BVN your to your NIN as well. So they have access and visibility to all of your incomes from all sources. So of course they will just be waiting for you to show evidence that you have filed adequate tax returns. All right. So there's a question here. Okay. What if the business name is owned by two or more people? What are the incentives under the speculative? Okay, no, it's not speculative. Okay. So business name owned by two or more people. Okay, so this can only happen in the case of partnership, right? So typically a business name is owned by one. So, but if you have two or more people, then it means what you have set up is actually a partnership business, not just a business name. Of course, partnerships are also still business names. All right. So we are saying what are the incentives. Okay. So when you have two or more people as partners um, in a particular business name, so the question is the accounts of that business name, um, how is it opened, right? So, of course, I expect that it will be opened in the partnership name, right? So, if it's opened in the partnership name, then it makes it more complex, and you then need to then sit down and decide what is the income of each of the partners. So because you cannot subject a partnership to tax, right? So in tax, partnerships is not how will I put it now? So there's no basis for subjecting partnerships to tax, right? Rather, you have basis for subjecting individuals to tax, and we have basis for subjecting companies to tax, right? So let's understand this. All right. So since we already know that partnerships are not subject to tax, it then means that the tax authority, if they don't have any information and they are unable to determine the incomes of the individual partners, they can actually um, use a presumptive tax basis, best of judgment. They can look at another business name with similar structure, right, and look at what the incomes those guys have declared, right, and then use that as a basis to determine incomes for this partnership. So they can adopt whatever method they deem appropriate actually to determine what the income of those individual partners would be and then subject them to the tax individually, right? So they are not going to be the partnership itself will not be subject to tax. Rather, the individual partners, that's the one by one persons behind that business name, will be the ones to be subject to tax. All right. I hope that answers your question. And of course, feel free to drop the follow up question if you want me to explain further. And I'll be glad to respond to it quickly, respond to your follow up quickly. All right. Okay, Daniel. Yeah, thank you so much for the session thus far. Please, I want to ask concerning taxation of partnerships under the NTA and NTA, which taxing authority is responsible for taxation of partnerships? Right. So I explained that already. So for partnerships, um, the partnership itself is not subject to tax. Rather, it's the individual partners that will subject to tax, and it is the duty of the tax authority of the state where the individual partners reside. It is the responsibility of those states to look after tax administration for the individual partners. So the tax authorities will be the state of residence of the individual partners and not the partnership. All right. So let's get this clear. So of course, we know there's limited liability partnership, right? those have those limited liability partnerships actually have the structure of a company. So for those for a limited liability partnership, it's a different ball game, right? So their taxes are due to the FIRS. So but for general partnerships, limited partnerships, the other form of traditional partnerships that we have always known, the taxes of the individual partner is paid individually, right, based on the state of residence of the individual partners. All right, so that's how the taxes of partners is determined. Okay, additionally, the limited partnership is subject to CIT or Peter. Yeah, so I already mentioned this. So for limited liability partnership, yes. So these funds have the form of companies, corporate entity, and their taxes is due to the FIRS, so the Federal Inland Revenue Service. So limited partnerships are not seen as business name and they are not seen as individuals. So they are subject to tax, like the subject companies to income tax. All right. Thank you for the very intelligent questions that has been coming in so far. Thank you very much. Yeah, it's been an engaging session today, and I'm loving it. And I hope you are too. I hope you're enjoying the session as well. So I would go back to the questions, right? And then let me take them from here. Okay, so now I'm going to be. I will just go straight into um, one of the videos that I did recently. I think last week. Yeah, last week I did a video where I discussed the top 5 strategies, right, for high income earners. So when I say high income earners, I mean people who earn really big. Of course, I know a lot of us here are high income earners. So um, and it's not limited to business owners actually, even people in employment, they can adopt these strategies. If you have not seen the video, I think it's, let me just go through, let me just discuss some of the points I made in that video, and then you can also go back to watch the video if you have not done so, that you can get the full gist of the video. I discussed 5 strategies actually, right, that high income earners should start to adopt to reduce their tax liabilities, right? So these strategies are going to help you to reduce your tax liability, and you'll be doing it legally. No evasion, no nothing shady, nothing fraudulent, not just straightforward application of the tax laws. Some of the things I'm going to say now, you might have, you possibly have not heard it before, you have not seen it anywhere else before. So, but these things are actually novel, and there are strategies that you can adopt. All right. So, of course, we all know that compliance best is the best way to actually maximize, to actually save a lot of money, right? Compliance. That's the first thing. Okay. Let me go back to the question. So somebody dropped a question now. Will companies which doesn't make up to 100 million naira pay VAT? If not, will they be paid back their input VAT by the government? Okay, all right, that's where we started from this evening. Yeah, I guess you were not in when we started, so let me just discuss that. All right, so the law, the Nigerian Tax Act exempts companies, right, with turnover of up to 100 million from charging VAT, right? So, but it does not stop them. It does not that threshold does not apply to registration, right? It only provides a basis for exemption, right? So meaning that, and of course, if there's an exemption in a tax law, you can actually decide not to take it if you don't want to, right? So of course, if there's a relief and you don't take it, then there's no penalty for that, right? So that exemption, you can actually decide not to take it. So that's on one side. For your input VAT that you have paid, you know, basically what the law provides for input VAT paid when you cannot when you don't have enough turnover, or you don't have turnover at all to offset it, is to actually apply for a refund. That is what the law provides for, that you apply for a refund. And of course, we all know, of course, from our experience in the past, we know what the refund mechanism looks like, even though the new tax act promises to make it a lot more better. So, but of course, cash flow is still involved. It means you have money tied down somewhere and you have to wait for some time to get it back, right? So, in order to manage your cash flow, why not go ahead to issue a VAT invoice? Issue a VAT, get your output VAT, and then offset your inputs against your output VAT, and then you pay the excess output VAT to the government, right? So I would rather be the one paying government tax than be wait for government to pay me a refund, right? If I'm a business owner, I would rather be in that position. I would rather be in the position of where I have excess VAT to pay to government than be in the position where a government is expecting me to. I'm expecting money from government for government to pay me back tax that I've paid, and of course, this also boils down to proper cash flow management, right? So, so I think it's actually advisable for small companies who know they are going to incur substantial input VAT to go ahead to issue VAT invoice and then do proper VAT returns and then claim their input VAT. Okay, Said Sanusi, sorry, I missed your question. Let me go back and see. Said Sanusi. All right, so your question is not in this chat. I guess you dropped it in my social media, one of my social media handles, and I think I missed it. So please, if you can drop it here again, and then I would take it right away. I'll take it right away and respond to you. So I receive a lot of questions in my DM, actually, a lot of comments and requests in my DM. So it's possible that I actually missed your own. I'm sorry about that. So please be kind enough to drop it here again. Then I will pick it up and respond to it. All right. Yeah. Thank you very much. So I'll be expecting you to drop the question, sir. All right. So okay, so back to you, Kafayat. What is the percentage of withholding tax and who pays it? Can business name charge withholding tax? All right, so yeah, so for withholding tax, the percentage varies, right? So we have rates between 2% to 15%, depending on the type of transaction and who the vendor is, whether an individual or a company or partnerships, or whether the person is resident in Nigeria or a non-resident, right? So there's a table, right, provided in the withholding tax regulation that specifies the rates for different transactions, for royalties, for rent, for dividends, for services, for 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 a whole lot of commission on a whole lot of other chargeable transactions. So it's not a singular rate, right? So it depends on the particular transaction you are looking at. And of course, who pays it? It is the service provider that pays it, right? So because at the end of the day, withholding tax and advance payment of income tax. So for instance, I'm a consultant. If I provide you tax services, right, and I issue you an invoice for my tax services, what the law requires is that you withhold tax, right? So how do you withhold tax? When I issue you invoice, for instance, 2 million naira to file your tax returns, right, with the tax authority, you are supposed to deduct withholding tax of 5%, right? That's the rate for professional services. 5% of 2 million naira, that's about 100,000 naira. So you're supposed to deduct 100,000 naira and pay me 1.9 million plus VAT, right? You pay 1.9 million plus VAT. That 100,000 naira that you deduct is the withholding tax on my own invoice. And then what the law requires you to do is to pay that withholding tax to the tax authority. So I currently reside in FCT. So you pay the withholding tax to the FCT IRS, right? Good enough, you can pay online, and they have you can pay online on Remitter. So you pay online on Remitter to them, and then you provide to me that evidence of payment and the credit note. So what I'm going to do with that evidence of payment and credit note is that at the end of the year, when I'm filing my tax returns, I'm going to show that as part of the evidence of tax payments, right? So I'll use it to offset my tax payments that I'm supposed to pay on or before 31st March when I'm filing my tax returns, right? So I'll use that withholding tax to offset whatever tax liability I have, and I will only pay the excess to the tax authority. That is what withholding tax does. So you now say, can business names charge withholding tax? So no, so you don't charge withholding tax, you deduct withholding tax from payments, right? Like in the example I explained now on my invoice, you deduct withholding tax before paying me. All right. So So deduct the tax before paying me. All right. So that so you don't charge it, you deduct it. All right. Okay. So yeah, Mr. Said, please, I have checked again. I'm trying to check. I've checked the chat room here. I can't see your question, Mr. Said. Please do well to. I guess you dropped it in another platform. I can't see your question in this chat room, Mr. Said. So please just be kind, try type it again, drop it again, let me, and I will respond to it. All right. So Kafayat, I hope I have answered this question. If not, please let me know, and I would respond and answer again. So yeah. So okay, yeah. So Mr. Said, I'm waiting for you. I'm waiting for your question so that I can respond to it as well. Okay. All right. So yeah. So thank you for staying so far. So while waiting for Mr. Said, I will just quickly um, touch on those for strategies for high income earners to reduce their tax liability. All right. So the first thing is actually compliance. Compliance. That's the first strategy. That's the best strategy to reduce your tax liability. So because if you don't comply, then you will be exposed to penalties, right? So there's penalty for late filing or non-filing. There's also penalty for late payment on own payment. So when tax authorities come to you and they establish that you have not paid your tax liability, they assume your tax liability is supposed to be 1 million in a year and you have not paid it, they will charge you penalty first, 10% of that 1 million. They will now still charge you interest, 27% on that same 1 million. So meaning that you'll be paying additional 37% on that amount of tax that you're supposed to pay. So you see that you'll be losing a lot of money, and you also still pay 500,000 for not filing, for failing to file. So that is already additional taxes you are paying. You are paying more tax that you should pay. So that I said that's the first strategy actually to reduce your taxes. So ensure that you file your taxes and you file on time. So that is the first thing to reduce your taxes legally. All right, that's the first strategy to reduce your taxes legally. Okay, so Mr. Said has dropped his question. How do we remit VAT charged for a company not registered on tax promax? How do we remit VAT charged for a company not registered on tax promax? Okay, so you are talking about a company that has not um, that does not. Okay, so I think this company has a TIN, but they don't have a profile on tax promax. That's what you are saying, right? So no, so what you are saying, that's what I'm saying. Then it means that this company has a TIN, but they're not registered on tax promax. So if that's the issue, that's not a challenge, that's not going to be a challenge for you. So to remit VAT, it's actually you just all you need to do is to fill in um, all you need to do is to fill in the input section, right? So good enough, the input section do not have any specific requirements. All you need to do there is to input the amount of input VAT you are claiming for the period, and your returns will go through. That's for the input VAT section. So, but if you are saying you as a company, you are the one that is issuing VAT invoice and you are not registered on Tax Promax, then you won't be able to file your VAT returns if you are not registered on Tax Promax, because that's the only means for filing VAT returns as we speak. The tax authorities have stopped receiving manual VAT returns. They only do it in rare occasions when maybe there's a downtime or IT downtime, or there's a challenge with the platform. So I want to. I don't know if I've answered your question. So, but if you are saying that the company is registered at all for TIN, then for a company that's not registered for tax, such company cannot issue VAT invoice in the first place because, of course, they are not even VAT registered. And if you are the one paying, then any company that you should not be dealing with any company that is not registered for tax, because it's actually not, and they're even issuing VAT invoice when they're not registered for tax. It's actually illegal, right? So that is collecting monies from people illegally that they don't have any plan to remit or file to the tax authorities. So I hope I've answered your question. Yeah, so I hope I've answered your question. So, um, So if this is your business, actually, I advise you to go ahead and get a profile on Tax Pro Max. Go ahead and register for your Tax Pro Max profile, because it's very critical that you get it right and you do it right, so that you don't run into issues with the tax authorities. All right. So I hope I've answered your question. So please feel free to let me know. You can drop follow-up comments to let me know if I've answered, or you want me to um, um, provide more clarity. And of course, I'll go ahead to provide needed clarity to you. All right. So yeah. So that's on that. So yeah. So back to our strategy. So I'll be juggling between that and then this, so that we don't have any dull moments. So please feel free, drop comments, drop your, if you are in this session, you have not liked the session, please like it please, so that we can have it, can, so as YouTube can um, push it out to other people, and they can also join us in this section. All right. So the second strategy, right, that you can adopt to reduce your taxes is to actually set up a small business, right? Set up a company that is limited, as a limited liability company that is small, right? So when you set a limited liability company and turnover is below 100 million, you are exempted, fully exempted from company's income tax, from development levy tax, and then you get full exemption on all your profit, or all your business profit. So this second strategy that you can adopt. So instead of so you can actually decide to set up businesses, right, with monies that you have, and these businesses are small companies, and then you get additional income, which is from profit you make from that business, and that additional income is then exempted from tax. Right, this is the way of making your turning your after tax profits, which you earn from your salary, for instance. Use it to set up a side gig, a side business, a side hustle, right? Register as a limited liability company. You turn that after tax income into a profit making venture, right? That then generates additional income for you that is tax free, fully tax exempt. So this is a strategy to actually reduce your overall tax exposure, right? Another thing you can also do is to set up, set up your side hustle, a side company, right, that you own and run. And instead of buy your car, or buy your generator, for instance, if you have a mechanic generator in your house, or even your normal what do they call it, pack generator, right? 10 kVA pack generator now costs over ₦1 million. That's a substantial amount, right? So if you put that, if that is owned by your side business, right, and 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 you're not paying, and you're not buying it from your after tax profit, right? That allows you to enjoy. So allows you to reduce your overall tax exposure. Okay, so Mr. Said has also asked another question. The client company isn't registered on tax pro max, but we already charge VAT. Okay, so the client is not registered on tax pro max, but we already charge VAT. Okay. So this is your output VAT. Okay, I get where you're coming from now. So when you're filling your output VAT schedule, there's actually a requirement to put the TIN of your customers. I think that's where you're coming from. Okay. All right. So yeah. So what's the implication of using your credit note to offset your CITP? I'll come to that. All right. So for for companies that are not registered on tax promax, they don't have TIN and they're not on tax promax, then you should actually not you should encourage them to register for tax. That's the first thing. Encourage them to register for tax, and you can actually register them yourself. Register them for yourself. I guess you're a consultant. Register them yourself and put their TIN on the portal when you're submitting your VAT returns. I think that's the best way to go about it, because why shouldn't they be registered in the first place? So I think you should just adopt that approach and advise them appropriately on why they should be registered on tax pro max for tax, right? And then what's the implication of using your credit note to offset your CIT liability? Okay, rather, there's no implication actually. Rather, it's actually a benefit, right? So if I have CIT of say 10 million naira and I have credit notes of 4 million, for instance, what would happen? I think what your question is what was you want to understand what would happen. So all your credit needs to offset your CIT. Yes, so what I would what of course, so if your CIT is 10 million and your credit note is 4 million, then it means you'll be paying only a tax liability of 6 million to the tax authority. That is what it means because you already have 4 million with the tax authority in the form of withholding tax credit notes. So, but there's also a twist to this actually. It's not always this straightforward because sometimes you can have because your credit notes are from different transactions. So you could have credit notes, right, that relates to transactions not within the period you are filing your tax returns. Let me explain that. If, for instance, you are filing tax returns for 2025 YOE, right? 2025 YOE is for January 1st January 2024 to 31st December 2024. That's 2025 YOE. So it's possible that when you're filing, by the time you're filing your tax returns in June 2025, you would have credit notes for January to June 2025. So now the credit notes for January to June 2025 is outside the scope of the returns you are filing. So you are filing returns for January 2024 to December 2024. So you cannot use credit notes of January 2025 to June 2025 to offset the tax liabilities of January 2024 to December 2024. I don't know whether you understand that, right? So please let me know if you understand that clearly. So you have to match. So the credit notes you are using to file must match the period that you are filing your returns for. So the credit notes must match the period. And whatever credit does not match the period, you take it out and use it in the subsequent year. And of course, you can use credit notes that date back. Like for instance, you can use 2023 credit notes, 2022 credit notes. You can use it to offset 2024 basis period, right? So so you can actually use backdated or older credit notes, but you cannot use credit note that is in the future to offset tax liability. And another thing to add is that at some points, I think maybe 5, 6 years ago, the tax authorities came up with, I think that was during Mr. Fowler's regime, the tax authorities were strict on statute bar, right? They tell you your credit note once it's over 6 years, it's statute bar. You cannot use it to claim any tax credit anymore. So, but of course, there were different. There were several pushbacks by taxpayers, right? Because if you look at the tax laws, there's no provision that supports that claim, right? So credit notes do not get statute bar. There's no provision in the tax law that specifies or states that credit notes get statute bar. So you can use your credit note for um, any period, right? No matter how old it is, so far it's a credit note, right? It's monies that you have with the government. You can actually use it to offset your tax liability at any point in time. All right. So I hope I've answered your question. So please let me know in the comments if you want me to provide additional clarity or you need um, more explanation, and I would provide that to you. All right. So yeah. So, okay, yeah. So I've discussed my number three strategy that should leverage company-owned assets. And then now I'm going to discuss number four strategy, right? And number four strategy is that you should actually start to invest in government bonds and treasury bills. So government bonds and treasury bills are actually very good investments. They pay very good returns and they are also tax-free, right? So when I say tax-free, there is no form, don't pay any form of tax on incomes that you earn from this investment. So when you invest in federal government savings bonds, you are more or less borrowing money to government. You are lending government your money, and then government will pay you interest for that loan that you have given to them. For same for treasury bills. So treasury bills too, you are also um, funding government, and government is going to pay you interest on that funds that you have made available to them. And it is tax free. It's exempt from withholding tax, and it's exempt from income tax as well. So no withholding tax deduction. So it means you are making additional 18%, 23% on your monies without any form of tax, without paying any additional tax. Can't you see? So imagine that you invested 10 million naira and you are getting a 20% return on 10 million naira. That means you are getting additional 2 million naira, right? Tax free. So you can see that this is actually is going to reduce the overall tax exposure, right? So as an individual. All right. So and then my number five strategy that I also discussed in that video. So you can go back to watch that video so you can get full details, right, of what I discussed. So I'm just trying to gloss over it now, right, based on some of the stuff I have in my head, right? So of course the video provides you better a fuller picture of what I discussed. So number five strategy that you should also consider is actually the pension scheme. All right. So a lot of people actually thinks that pension stops at the monthly deduction from your salary and what is related to the pension fund, but it goes beyond that, right? So people are actually taking advantage of the pension scheme to make money, to make themselves rich, and to reduce their tax liability. That is the one that is very, very important. This is to reduce their tax liability, and they also make money and build wealth. They make money, they build wealth. They also preserve funds for their retirement and after work life, right? Which makes it sweet for me. All right. So um, you can make additional voluntary contribution to the pension scheme, right? In addition to whatever your employer has paid on your behalf and what they have paid from your salary. And the good thing is that any additional contribution that you make, okay, so Mr. Adegun is asking another question again regarding the withholding tax for business name. Can withholding tax be used to offset PIT? Yes, sir. Yes, sir. So for business name, withholding tax that is deducted from business name is actually used to offset personal income tax, right? Remember, withholding tax itself is not a tax. Withholding just like PAYE is not a tax. Withholding tax is just a means of tax administration or tax collection. Sorry, tax collection is a means to actually collect tax in advance. Ordinarily, taxes should be paid at the end of the year, right? That is why companies pay tax at the end of the year. So in Nigeria, we don't do advanced tax. We don't do in some. Okay, so for companies in the petroleum industry, they do estimated taxes that they pay first, and then they do a final tax at the end of the year that they then adjust for to determine what the actual taxes is. But for other people outside the petroleum industry, we don't pay advance tax, right? So we pay tax at the end of the year. So, but government cannot continue to wait till the end of the year, right, before they get monies to do infrastructure, to run the economy, to pay salaries of public servants and political officers, to continue to run the economy and all of that. So that's why they came up with withholding tax, right? And PAYE. So what these things do is that they start to collect some amounts from taxpayers in advance. So for instance, withholding tax, they can take 10%, 2%, 5% in advance, right? So that at the end of the year, when you are now determining your tax, your income tax, whether it's be it personal income tax, be it company's income tax, that's when you determine what your taxes for the year should be, right? And then when you examine what your taxes for the year gone past is, you can now take all the withholding tax credit that you have paid during the previous year, all of them, you can now take it to offset the final income tax liability that you have computed, right? So that is the whole essence of withholding tax. And of course, you can use it to offset personal income tax, you can use it to offset company's income tax, depending on the type of structure you have. So for a business name, somebody that is deducting tax from you, then you can use withholding tax to offset your personal income tax. Right. I hope I've answered that question, sir. Okay. So yeah. So let me just wrap up my discussions on pension, and then we can close it for the day. Except you have more questions for me, then I will stay till whenever we are done with your questions. All right. So the last point, pension. I was talking about pension. So when you pay additional voluntary pension as an additional contribution to pension, you'll be able to deduct 50% of that contribution after 1 year, right? So you know that when you make additional pension contribution, it will be considered as a relief in your payroll computation. It will reduce your personal income tax for the period, right? Once they take out that voluntary contribution, it reduces your personal income tax, right? And then you pay less personal income tax. So that amount you have paid to pension, you can go back after 1 year to withdraw 50% of it, of that amount, right? You take out 50% of that amount. So, but because you are withdrawing in 1 year, the gains on that additional contribution, they will tax the gain. The gains will be taxed, right? And you'll be paid it's the interest, not your contribution. The interest that you make on that contribution will be taxed, and they will pay you the net amount, right? In addition to 50% of the contribution. So, but if you can wait 5 years, you will get that contribution plus your full interest without tax. After 5 years, you get it back, right? And then your remaining 50% is what will be locked in your pension fund till when you retire, and you can then, of course, that will also accrue interest, and to also increase what you are able to benefit from after retirement, right? So that is how to take advantage of additional voluntary contribution. So it reduces your tax liability now, right? And then it helps you to generate additional income in the short term. So in 1 year you get additional income, in 5 years you get more, and then after retirement you get much more returns on that contribution that you have made. All right, so that is the five sharp smart strategies I discussed in that video. Please look out for that video, go and watch it, make sure you watch it, digest, and also share it with people that you know that can actually take advantage of those strategies. Actually, for people, high income earners, people who are earning, who are making high income, professionals, bankers, um, just people in your community, your friends, your neighbors, they are all around you. Share it with them, let them watch the video. All right. Okay, so I have another question. We have been given a LO high, all right, after audits from 2018 to 2022. All administrative expenses were disallowed. CIT was increased to 10 million. We have credit notes of 10 million. Would you advise we use HAL? No. So don't. Yes, I understand that you have credit note that can match the liability that has been raised, right? So, but that's not the right thing to do. So you don't want to throw, because that credit note you have is money, right? So you don't just throw away money that way because if you think it's handy and you just want to give it out and just let go of it. That credit note can actually save you 5 years time from now, 2 years time from now, next year, 3 years time. So you can keep it. If you don't have to utilize it, then you don't have to utilize it, right? So first things first, the tax authority cannot just disallow your entire admin expenses. So doesn't mean that the company just run spiritually. It was a miracle that the company just operated during the period, and the company just generated profit by miracle, and there was no admin expenses incurred. No, it's not. It's not. It's not okay, and it's also wrong for FIRS to disallow your entire admin expenses. It means they didn't do any work during their field work. They did not, or they just came to witch hunt you. That is what it means. Because you can't tell me that the entire admin expenses is not valid. So what the FIRS should be doing, or the tax authorities should be doing during audit, is actually go through your GL, go through your transactions, and request sample or request for documents to substantiate transactions that they doubt or that they have questions that they want to ask. So if they have not specifically told you that this transaction that you did on the 25th of December 2023 or 2021, we need evidence to substantiate it, show us evidence. If they have not done that, to specifically tell you individual transactions that you should provide documents from, then they don't have any right to disallow your expenses. And you can take this to any level. You can escalate to the tax controller in that office that it came from. If you think tax controller is compromised or is not going to give you proper response, you can take it to the state coordinator. Or if you think the coordinator will not respond to you, you can take it to the chairman. Right? And if the chairman is not going to attend to it as well, you can then go to the tax appeal tribunal because that process has not been properly carried out. So an audit should actually they should actually request you to provide documents for transactions that they don't agree with, and not just say entire admin expenses disallowed. It is not. it is not. It starts with one thing, and the tax law does not support that type of process, right? Because you are, as a taxpayer, you have the right to fair hearing, right? You have the right to be treated properly, and of course, professional ethics in accounting also requires that um, they do their work thoroughly, right? Request, do proper audits, right? And not just go ahead to disallow your entire admin expenses. So that is frustrating. I can imagine that your admin expenses have transactions of like 1,000 lines, right? And then they disallow everything. So are you supposed to then provide documents for all the 1,000 transactions? Or are you supposed to then provide documents, or which one exactly will you provide documents for? So you can provide documents for, say, 10 of it, and they will tell you that, okay, they will only agree to those 10. Or they tell you that these are not the 10s that we are interested in, give us more. So for how long will you continue to do that? So you continue to go back and forth and waste whose time are you wasting? So time is money and precious. I don't think you should allow them if you agree to this process. So the process that disallow your entire admin expenses is not a fair process, and I'm not sure that they've done thorough audit. So I've done audits for big, big, as in the big, like the biggest companies in the stock market. So I'm talking about, I don't want to mention names, right? So the major milling companies, when they do audits, of course, the reports will be voluminous, but they will highlight specific transactions, specific issues. The report will show you specific issues and transactions where you need to provide additional documents to support your claims or to show evidence that you have the compliance. And it's only in those instances that you can go ahead to adjust for transactions. So they don't just adjust for expenses. It has to be transaction based, right? So I think I've been able to advise you on what you should do. So don't use your credit note for this type of frivolous claim. It's frivolous, and you can actually go to court to defend your right. And of course, the courts would not be in support of a process that tries to disallow your entire admin expense, right? So the entire admin expenses are disallowed, but then they are not saying that your revenue also should be lower, or or you have overstated your revenue. So there is no so that's it. So please, thank you all for your contributions today. I hope I've been able to answer your question, Mr. Said. Right. So I'm been able to provide you advice on what you can do, and if you think you also need a consultant to help you, you can actually get one to help you with the process. But of course, a consultant will also tell you the same thing I'm telling you. Any consultant tells you the same thing I'm telling you. So nobody can adjust for your entire admin expense and put you on a white good chase, right? So that's frustrating, and that's a waste of some people's time. So, and of course, we know time is valuable and time is money. All right. So thank you all for your attention this evening. I truly appreciate the comments that came in today, the questions that came in today. The level of interaction is actually very encouraging, and I really appreciate the engagement this evening. So in the absence of more questions, more comments, I think we can call it a day today. It's actually been a wonderful and a very fruitful deliberation today, and I look forward to having you join again next week. So this session has come to stay. So it doesn't matter if we are 10, if we are 20, if we are 5, if we are 100, if we are 1,000 people on the live session. It doesn't matter actually. So at the end of the day, what matters is that one person, only one person, if only one person is impacted and has benefited from this session, and life has been made easy for one person, then I'm fulfilled for the day. All right. So if I can get one person to join the session every week, then of course we keep going. But of course, the more the merrier. If we have more people, good enough, right? And then we keep going. So thank you all for joining. So please, you can also tell your friends about this, right? So they can join us, right? At subsequent sessions. And if you also want to join me, right, so that we talk to so you be a co-host and we can take questions and respond to issues together and deliberate and rub minds during the live session, please feel free to reach out to me, and I would, of course, make you an host. But you need to let me know ahead of the session so that I can set up I can do the proper setup to have you join as a co-host. So thank you all for joining this evening. I truly appreciate your time. I know it's been a long week, right? And now the weekend is very short, and then we are entering Monday next week. But you have decided to spend your time with me here this evening. So I truly appreciate the time that you have spent here and the sacrifices you have made to actually be in attendance today. So thank you very much, and I look forward to having you join again next week. I look forward to you coming with your friends, your colleagues to join the section next week. All right, so thank you very much. I wish you all a fruitful week ahead. I wish you all a great week ahead. Good night, everyone. Thank you for your time today. Yeah, good night. Good night, everyone. Yeah, thank you all for joining today. Yeah, yeah. God bless you too. God bless you too. God bless you too. God bless you. God bless you, everyone. God bless you, everyone. Yeah, thank you. Thank you. Thank you all. Thank you. Yeah. All right. All right. So I'm ending the live stream now. All right. Thank you, everyone. Yeah. All right. Bye. Bye.